Good morning. As dawn breaks over Europe, a sense of anticipation fills the air in the continent's financial capitals. As we scan the financial world this Tuesday, December 9, 2025, European stock markets are unusually calm. The numbers on the screens barely move, and the usual buzz of activity is replaced by a quiet, almost tense, stillness. It's the classic pause before a major announcement. Investors are cautious, waiting for a signal from across the Atlantic. The atmosphere is thick with expectation, as if everyone is collectively holding their breath. The reason? The U.S. Federal Reserve is about to begin a pivotal meeting that could set the global economic tone for months. Every word, every gesture from the Fed will be scrutinized for clues about the future. This stillness is common before big economic events. Think of drivers slowing at a traffic light, unsure if it'll turn red or green. The world's financial engines are idling, ready to accelerate or brake at a moment's notice. The Fed's decisions ripple worldwide, influencing everything from London's borrowing costs to Berlin's business investments. Even the smallest policy shift can send shockwaves through global markets, affecting currencies, stocks, and bonds. On trading floors from Paris to Frankfurt, the mood is analytical, not frantic. Professionals are focused, dissecting every bit of available information, trying to anticipate what's next. Analysts are poring over data, not making big trades. They're running scenarios, updating forecasts, and preparing for any outcome the Fed might deliver. For most people, this may seem distant, but these decisions can affect mortgage rates, pension values, and jobs. The impact of the Fed's choices will eventually reach ordinary households, shaping the cost of living and financial security. Beneath the surface, there's intense strategic thinking as everyone prepares for the Fed's announcement. Boardrooms and trading desks alike are filled with quiet conversations and last-minute adjustments. Investors are waiting for a clear signal. Will it spark a rally or call for more caution? The next move could mean opportunity or risk, and everyone is ready to react. Until that clarity arrives, Europe's markets remain in a poised, watchful state. The silence is almost palpable, as if the entire continent is listening for the first hint of news. The next move depends on what comes out of Washington, D.C. In the hours ahead, all eyes will be fixed on the Fed, waiting for the decision that could shape the economic landscape for months to come. What does this calm look like in numbers? Let's take a quick tour of Europe's main stock markets and see how the day's mood is reflected in the data. Across the continent, investors are watching and waiting, with every tick and percentage point under close scrutiny.
In Germany, the DAX index edged up by just 0.2%. A hint of optimism, but nothing dramatic. The movement is so subtle, it's almost as if the market is holding its breath, waiting for a bigger signal before making any bold moves.
France's CAC 40 was up by only 0.1%. This tiny uptick shows that French investors, too, are treading carefully, not quite ready to commit to a new direction. Investors are mostly on the sidelines, reflecting a day of contemplation. There's a sense of collective pause, as if everyone is waiting for the next chapter to unfold.
In the UK, the FTSE 100 slipped by 0.1%. Even here, the change is barely noticeable, reinforcing the overall mood of caution and restraint. It's not a cause for alarm, just a slight exhale in a room full of held breaths. The atmosphere is one of patience, not panic.
The key takeaway is consistency. Whether a tiny gain or loss, the markets are showing remarkable stability in the face of uncertainty. Europe's major markets are all moving in a tight, narrow range. It's a rare moment of collective stillness, with volatility at a minimum. Regional news is overshadowed by the looming U.S. decision. Everyone is looking across the Atlantic, waiting for a signal from the world's largest economy. These indices, representing economic health and investor confidence, are all telling the same story. The message is clear: caution prevails. They're waiting for guidance from the world's most influential central bank. The next move from the Fed could set the tone for markets everywhere. Until then, expect more of this quiet, steady state across Europe's trading floors. The sense of anticipation is almost palpable. The continent is united in anticipation, with every market participant watching and waiting for the next cue. The next move will be dictated by the Fed, and until then, Europe's markets remain in a holding pattern, eyes fixed on Washington. Now, let's talk about the main event, the U.S. Federal Reserve meeting, a gathering that has the power to shape the direction of the global economy. The Fed's decisions on interest rates send shockwaves across the globe, influencing everything from mortgage rates in the U.S. to currency values in Asia and Europe.
This week, the Fed is expected to announce a significant move, a likely interest rate cut, which has been the subject of intense speculation among economists and investors alike. For years, central banks have raised rates to fight inflation, trying to keep economies from overheating and prices from spiraling out of control. A cut signals a shift. They believe inflation is under control and want to boost growth, making borrowing cheaper for businesses and consumers.
All eyes are on Fed Chair Jerome Powell, whose every statement is dissected for hints about the future. His words and the tone he sets could spark a rally or a slump, sending markets into a frenzy or calming investor nerves.
The US dollar is the world's reserve currency, used in trade and finance across continents. And the US economy is the largest, setting the pace for global growth and investment. The Fed's policies impact currencies, investments, and business costs worldwide, affecting decisions from Wall Street to small businesses everywhere.
That's why a meeting in Washington, D.C. draws attention from every corner of the financial world. It's even causing European markets to pause, as investors wait to see how the Fed's decision will ripple through their economies. The fate of global investments could be decided in that room, where every discussion and decision carries enormous weight. Investors will scrutinize every word from Powell for clues about 2026, searching for any sign of what's next. The outcome will set the tone for months ahead, shaping strategies and expectations for the rest of the year. The world is watching and waiting as the countdown to the Fed's announcement continues. Tomorrow's announcement is the moment everyone's been anticipating, a decision that could shape the economic landscape for years to come. What's an interest rate cut and why does it matter? It's the wholesale cost of money. When the central bank cuts rates, borrowing gets cheaper for everyone. Lower rates mean cheaper mortgages, car loans, and business loans, encouraging spending and growth.
Markets are almost certain a cut is coming. But the real question is, what's next? Is this the start of a series or a one-off? Investors expect about 3 cuts by the end of 2026. But the Fed's message could be more cautious.
If Powell signals a pause after this cut, it could disappoint markets hoping for more aggressive easing.
Forward guidance, hints about future policy, will truly move the markets.
If Powell sounds optimistic, stocks could rally, and the dollar could weaken, helping European exporters. If he's cautious, markets may react negatively. Everyone's fixated on his words. They'll shape the financial roadmap for 2026. The Fed isn't the only central bank in the spotlight. Europe's policymakers are preparing for their own crucial meetings.
It's like dominoes. After the Fed, the Swiss National Bank announces its decision, followed by the Bank of England and the European Central Bank next week. Norway's and Sweden's central banks are also meeting, making this a critical period for European monetary policy.
Each bank must weigh its domestic situation against the global backdrop set by the Fed.
The ECB faces the challenge of setting policy for 20 diverse economies. A Fed cut gives them more room to maneuver.
No central bank acts in a vacuum. They're all part of a complex dance.
The decisions made in London, Frankfurt, and Zurich will determine borrowing costs across Europe.
This will directly impact homeowners, businesses, and governments. The Fed's move is the first major signpost on the road to 2026. The next few days will shape Europe's economic path. Amidst the waiting, Germany delivered a surprise. October's export figures rose by 0.1%, defying expectations of a decline.
Germany's economy relies on exports. Rising numbers mean strong global demand and busy factories.
This small increase hints at resilience and suggests the worst of the slowdown may be over. It's a welcome counterbalance to the general uncertainty.
Despite global headwinds, German businesses are finding customers, perhaps due to stronger demand from China or the US.
1 month doesn't make a trend, but in a climate of caution, any good news is welcome. This export growth will be discussed at the ECB's meeting next week. It's a small but crucial sign of underlying strength in the Eurozone. This could influence future interest rate decisions. For now, it's a rare bright spot in Europe's economic landscape. Beyond the big economic news, several corporate stories caught investors' eyes today.
German industrial giant ThyssenKrupp posted a profit this quarter, a turnaround from last year's loss.
But management is cautious about 2026, projecting a net loss and lower sales due to global uncertainty.
This mix of good news and caution sums up the market's mood: short-term wins, but wary of future challenges.
Renault and Ford announced a partnership to develop affordable electric vehicles, aiming for a 2028 launch.
In healthcare, Novartis partnered with UK-based Relation Therapeutics to use AI for allergy drug discovery, a deal worth up to $1.7 billion.
These moves show companies investing in innovation despite uncertainty. The corporate world is adapting, looking for growth in new directions. Oil prices have been sliding. Brent crude is down to $62.44 a barrel, WTI to $58.81.
For consumers, lower oil means cheaper fuel, but for the global economy, it can signal weaker demand. Iraq's restored production at West Qurna 2 has increased supply, pushing prices down.
Geopolitics also play a role. Hopes for peace in Ukraine reduce the risk premium in oil prices.
More supply and hopes for peace are creating a powerful downward force on prices.
Lower oil prices can act as a tax cut, easing inflation and supporting growth. This is good news for households and businesses as we head into 2026. Energy markets are adding another layer of optimism to the economic outlook. So, what's the overall picture for Europe? The mood is one of cautious optimism.
The expected Fed rate cut signals the fight against inflation is turning, paving the way for growth.
Germany's export surprise adds a tangible reason for hope. Europe's economic engine is still running.
Lower borrowing costs and falling oil prices support a more hopeful outlook for businesses and consumers.
Corporate partnerships like Renault-Ford show companies are investing in the future.
The potential for peace in Ukraine offers another ray of hope for stability. The immediate future depends on central bank decisions, but signs point in a positive direction. Europe is holding its breath, but with hopeful anticipation for 2026.